Hi everyone, this is Professor MoneyPigTrading, a former PhD researcher, now data scientist and trader. And today is July 22nd, 2021. We're going to talk about gold, another epic round coming up this summer. Because gold actually has strong seasonality, often late July. It has a rally in the past 7 out of the 10 years, all the way to September. So really quick, if you haven't followed us, make sure to subscribe us on YouTube, MoneyPigTrading. We also have Instagram and Twitter, all both MoneyPigTrading as well. And if you're interested in our Discord community with a really high winning rate on stock trading and option trading, feel free to check out www.moneypigtrading.com and like this video. That will really help our YouTube channels tremendously. So, and also really quick disclaimer, we're not a registered financial advisor, so please invest at your own risks. And here we're looking at the GLD, which is the largest gold ETF, which directly correlate into the gold price. We're looking at the daily chart on the left side, which is the current gold GLD ETF. And on the right side is 2011, where we see actually gold had a 4-day, 8-day EMA cross in the early July. And actually pushed all the way up to 185 from about 145. So it's a pretty decent, about 40% run. If you use a long call option, which will make a video, the link is on the upper right corner, you should be able to make a decent amount of money, or just simply long the gold ETF and make some nice profits as well. And currently, we thought a few weeks ago, about 1 week ago, gold is about ready to have that rally. For the 8-day EMA cross, the TTM squeeze is actually changing color. So we're expecting gold to run into 183 and 190, kind of like 2011. And we're thinking the gold's going to run up because if you look at the inflation number, which gold has a very solid price protection, right? Like if you buy gold, everybody think gold has a very good value and is kind of anti-inflation. If we're looking at inflation number in the past few months, 2011, we're seeing about 5 to 5.4% of the inflation number. In 2011, however, the number is only 3.6, but gold actually had a huge rally we see in the last slide back to 2011. And this 5.4 number is actually the worst in the past 20 years. The last 20 years, the worst inflation in summer is 2011 and 20,000, but both around 3.8%. And now it's at 5.8%, so we do think gold was going to run up. Very similarly, if you look at the 2020 chart, which was last year, gold had a very similar 4-day, 8-day EMA cross around the end of June and pushed all the way up from around 160 to 190, where gold was almost touching, the gold future touching $2,000 per ounce. So we were expecting gold to run up this run as well. The other reason we're expecting gold to run up is the European central banks. Actually, they have a new regulation called Basel III regulations. Basically, this regulation has been effective since June 28th this year, if I remember correctly, the June 26th, 28th, 30th. Basically, what happened is before the central bank can just own so-called paper gold, like gold, on the paper, instead of actually owning physical gold. Now, however, this paper gold is not considered as a zero risk asset anymore. Only physical gold can be considered as zero risk asset. So once this regulation being implement, the European Central Bank will have to buy more physical gold. So I know there's some debate like whether this regulation will increase the gold demand or not. In my humble opinion, it will. So I do expect the physical gold and the gold future will continue to be boosted up by this regulation. So a lot of bullish thesis behind gold. However, there's a wild card coming in. That's COVID-19 Delta variants that happened this week. We're seeing this number start to push back up in the past, push up in the past 2 weeks, kind of like round 3, right? Even though we have COVID-19 vaccine, but the vaccination rate is not very high enough in the United States, and not to mention the worldwide, a lot of regions still don't have COVID-19 vaccine available. And because of that, the fear of COVID is going to coming back, and the potential lockdowns coming. So the fear of inflation is dropping, and so does the TNX. And you can see this TNX daily chart, 10-year Treasury yield, is a measurement of the inflation by the bond market. The lower the TNX, that means the lower the fear to inflation. You can see in the past 2 weeks, the inflation thesis is actually quickly dropping, making TNX break this long time range, $15 all the way to almost 11.2, and now pushing back up. So all of a sudden, because of this COVID variant, people are afraid of lockdown, the inflation thesis kind of go away. And that's why a lot of gold, the gold price is kind of right now sideways consolidation. If you look at the gold future, it's trying to defend around $1,800 per ounce right now, which is the GLD ETF price, around this 168 to 170, kind of sideways consolidation. The other thing we have to look at is next week, July 28, 2021, Fed actually have an interest rate decision. And also, there's a very important Jackson Hole meeting on August 26 to August 29, which was canceled last year due to COVID-19. And this meeting, the market believes that it will hint whether the Federal Reserve will start to taper the market, reduce the liquidity injection. If so, we're expecting the TNX will shoot up again to around 1.5 level. That potentially can help the gold. And probably starting next week, when the Federal Reserve interest rate decision coming up, you're going to see the market become more volatile, and also the TNX shoot up and potentially will help gold as well. So definitely have to keep those two factors in check when you are investing in gold. And that's why it's kind of hard to predict any gold price action, because there's just many moving pieces. In terms of COVID-19, Delta variant case, also the TNX bond market, the Federal Reserve meeting schedule, and not to mention we sometimes have to consider the U.S. index to see how strong U.S. dollar is, which could affect gold in either bullish or bullish way. If you're interested in gold, we actually have another interesting stock that we're looking at, and currently we're holding some stocks and long call options as well. It's called KL, Kirkland Lake. It's a senior gold miner based in Canada. So that means they're not actively exploring like new gold mining field. Instead, they're just producing gold using their existing mine fields and generating revenues, pretty steady revenue. And the higher the gold price it is, the higher the revenue their gold product will be, right? So the higher the gold price, the higher the company revenue will be, and so does the earning per share. At the end of June, they actually announced a 26.5% of shares of stock repurchase. That's pretty much almost 10% of their outstanding shares. So that should boost up the KL stock price pretty well. As soon as the earnings finish next week on July 28, their company will be able to repurchase the stock, which starts to see this stock price potentially going up. And also their average per ounce, the gold that they produce, is way lower than the current price level. So we do expect in this quarter they're going to have a pretty decent earnings, and possibly the price is going to start to shoot back up together with the stock repurchasing plan support. So definitely keep an eye on it, and we think the fundamentals very solid for this particular name. The chart was ready, and because of the COVID-19 Delta variant, it pulled back together with the gold future price and GLD ETF price as well. So yeah, definitely take a look at the earning next week on KL. So again, if you haven't followed us, make sure to check us out on www.moneypigtrading.com.